Is the Sacramento real estate market getting better? Is it getting worse? I heard a bank failed. Can that have a bad effect on it? Oh, the Fed just raised rates. Does that mean that mortgage rates went up? And why am I wearing a hoodie instead of a collared shirt? Hey, but the best question is, was I right when last month on my video I said that it looked like the real estate market in this area was getting better? We'll find out. It's the March 2023 market update. Let's go. So why am I wearing this hoodie? Now, just real quick, this isn't a paid promotional advertisement. This is just something that I am passionate about. People who know me well know I'm a huge proponent of professional training in youth sports beyond recreational leagues. The competition for kids to play at a high school level or beyond requires special training to prepare and preparing early. Otherwise, your kids are going to get to high school and find out they can't make the team, let alone be a starter. So you need to start with upper echelon training. The earlier, the better. And this hoodie is from Hammers Sports Academy. I'm going to switch microphones just so you can see it. Switch over to my wireless. There you go. Little graphic here from Hammers Sports. Back. Now, what this represents is Hammer Sports Academy. It's founded by a great leader who I've come to know, Jeremiah Farms, Sacramento football and Washington University football legend, who, as a defensive captain, led the Huskies of Washington University to a 2001 Rose Bowl victory over the great Drew Brees. Now, JP and his pro staff have taken youth sports training to the next level in Riverside County, and coming very soon to the Elk Grove area. JP's always getting back to his roots. Now, Hammer Sports, look for it, get involved. You won't regret it. Beyond the skills needed for success in football, they focus on mental toughness to get to the next level. And like they say at Hammer Sports, in football, you're either the hammer or the nail. Now, isn't that just life itself? Check them out at hammers.pro. Keep them in mind, and I'll link their website on my YouTube About section for this video. Okay, so the real estate world, some things you may have heard about. Some banks in risk of failure, Signature Bank, Silicon Valley Bank. Now, there's been a lot kind of just thrown around why that happened, and a lot of it is just because some of these banks invested in the bond market, which had a bull run for years and years and years, and then interest rates rose very, very quickly to make those, unfortunately, poor investments. And then a little bit of information got out there to some high balance account holders, and they started taking their money out all at once, an old-fashioned bank run. So it did have a positive effect on mortgage rate. Just interest rates rose so quick that some banks taking excessive risks and really invested their funds in certain things they thought were perhaps safe at that time, got caught without diversifying their investment portfolio. Okay, so let's get into my screen to show some data. Okay, so here is some data. I always start with Mortgage News Daily. It is a surveyor of mortgage rates throughout the country. I'm not a loan officer, so whenever I reference mortgage rates, I like to reference them. Now, at my video last month, this number for the 30-year fixed conventional mortgage was on average 7.5%. Now you can see it went down. Now you may have heard that the Federal Reserve just raised rates 0.25%. That's been expected for a long time. And it reacted a little bit lower when they did not indicate they would be raising it more than 0.25%. There was a little bit of fear for a while that they would raise it by more than that. And some of the trouble with some of the banks taking some larger risks also affected rates downward over this past month. In fact, rates got up close to and above at some lending institutions above 7%. So when they started falling more, we actually saw more buyers coming out. And the news about mortgages at that time, including up to today as I'm recording this, is that mortgage applications rose significantly during that period. So we'll see where mortgage rates go. It depends on so many things in the economy, and I can tell you I'm not expecting them to rise much more than that. I can tell you that I'm not expecting them to go down much more than that. But we'll see. And if you're holding out for 4% mortgage rates, you might be holding out for the rest of your life, for all I know. 4% was extremely low, and lower than that was wildly low. In fact, I kind of wish we never saw that. I thought it was unsustainable. Okay, so this next thing is the graphic of data. So this is something that most realtors have have access to. Whether they look at it or not or run the reports to do this is another thing, but this is the Trend Vision report for March 2023. What this represents is sales all the way to the end of February 2023, and then this comes out at some point in March. Okay, so the first graphic, again, what I always do is Sacramento County, single family residences on a quarter acre or smaller, because most homes are on a quarter acre or smaller, and naturally homes values increase significantly when the lot size is much bigger. Half acre, full acre, it could be a little house, it could be, a house that's really run down and be on an acre and sell for quite a bit more than a pretty nice house on a quarter acre, just because of the land size. Okay, so this is for sale and sold homes. So number of homes for sale, number of homes sold. So at the through February 23, you see that there were 600 sales and 748 for sale. So number of for sales keeps dropping every month. It just keeps dropping from July. Way fewer. Inventory is very low, and this really shows it. Now, if you go over here to the same month last year, it's lower inventory than this time last year, and in February of last year, it was still a rising market. In fact, I would say that I saw about the peak for pricing and sales in April, even though interest rates had already started to rise at that time. Then you see the homes sold also increased over January, which is what I said. If you go back to my video from last month, I said that you're going to see those increase. And that's not too surprising, but when you look at data from previous years, it's not at the same percentage. Last year, it only increased a small percentage over the previous month. This year, it definitely looked like it was going to increase significantly more. Yes, sales are down over last year. In fact, let's see, sales for sale homes month over month are down 20% from January. From the same month a year ago, 11.2%. Now, solds were up 22% over January, down 36.5% year over year. So yeah, there's quite a few. Sales are quite a bit down. Number of sales, but again, when you're looking at what the market is doing, it is being driven by low inventory, and do not expect a whole drove of sellers to start to sell because they are locked into low interest rates. So many people are just doing remodels, add-ons, ADUs, stuff like that, instead of moving. It just doesn't make financial sense for them to do it. Okay, so this next graphic is dollar per square foot. So sometimes this is it's a good way to show the average dollar per foot. I don't really use this for pricing, but sometimes it can tell you if you're overpriced, if you're the highest dollar per square foot in the area for comparables, or of course lowest. So it's the opposite. Now, this was another thing. If you go back to my video last month, I said I think this number is going to be rising in this next month based on what I've been seeing in the market. So in January, we see 304 has been dropping ever since May, and May was about the peak for closed sales. Now, keep in mind, when we're talking about closed sales, the average escrow is 30 days. So if it closed in February, that's a January offer usually. Not always. In fact, one I closed in February was like a 14-day, 13-day escrow. It's closed super fast. So we're a little bit up month over month, 2% up. Not a huge percentage, but it's not down. We'll see where we're going this next month. Back to this previous graphic, you're still seeing pendings going up. And when pendings are rising, that usually means sales are going to continue to rise as well. So that's what I think there. I think we're going to be seeing a higher dollar per square foot for this next month when we close out March as well. But interest rates did rise about 1%. During that time, they got down to about 6%, rose up to 7%. We're back down to about 6 3/8. So, that's going to have an effect on it. So we're seeing some more signs of market stabilizing, I think is really what that shows. It's not necessarily that it's just improving, looking for stabilizing. Usually you won't see a whole lot of flat months in general. So even if it's going up a little bit, and that's an improving market, I consider it to be more stable because they're not huge increases. Okay, so this next one is two different metrics, and this is percentage that a home sold over or under the list price. So you saw way back it was selling at 104% of list price, and then it was dropping into the mid 90s and it's slightly up to 96%. What that's telling me is people are pricing their homes more reasonably. Next is days on market, and average days on market is 51 month over month. So that's a really good sign of stabilization. When you see these ones down here in the 13, 15, even 20, that is pretty abnormal. That's a kind of a hot market for that to be going on. Because these ones more in the 30s to 40s is kind of really a normal market. Granted, so there's homes that are selling within the first week, and let's say when I talked about in my last video, and I'll talk about later on, that I sold in February, and it was a very, very busy open house for me. Um, that probably shows days on market at least 7 or 8 days, even though we had multiple offers and went well above the list price. And that's because we don't just take the first offer because it came in on the first day. We usually give it some time so agents can show, and then it's going to stay active on the market while we're doing counter offers. And in that case, we did multiple counter offers with buyers. So they have multiple days to respond. So there's a point where we're countering offers, and the buyers are responding to those, and then I'm presenting those counter offers from those buyers or their responses to the counter offers to the seller, and that's a multiple day process. So that's why you see, even in the very hot markets, homes being on the market for a week, longer than a week, even longer than that, because all the time involved in that back and forth and allowing agents to show the homes in order to receive more offers, or the better type of offer that you want for your terms. So stabilizing on days on market. I've talked about this metric before. I don't really care for it too much. It looks a little bit wild this month because of the separating of line. This is the average price of for sale homes versus sold homes, and it continues to separate. And it shows where affordability is at, and affordability keeps widening. Now, it looks like a whole bunch of homes came on market that were in that higher price point, and that's really what we saw there. Now, the homes sold on average flattened out really. So we'll see where that's at this next month. I actually expect this number for the red number here for average sold price to rise, but we'll see. And this last one is inventory. So this is significant. This is months of inventory based on the current absorption rate. If so, it shows 1.2 months of inventory for February. So that basically means if no new listings came on the market, it would take 1.2 months to take them all away. Now, that is significantly low, even though that maybe sounds like, oh my gosh, there's more than a month of inventory in 1 month. Well, that's because a lot of homes actually sit on the market for a while. Whereas even like these 2.2, 2.3, where it jumped up, that's actually still low inventory. Technically, it's not a buyer's market until that gets well above that level of inventory. So it is still considered a seller's market. Now, you really aren't seeing as many multiple offer situations as you used to see. It really depends on the home, of course. A lot of homes are just getting one offer, and uh, sellers are giving concessions. And that's one thing, by the way, if you're looking at sales prices, what is more common right now is sellers to give some sort of concessions for rate buy downs, being that it could be some odd of uh, thousands of dollars, maybe 10 grand to that the seller contributes to the buyer's closing costs in order for the buyer to buy their rate down. It's something to ask your loan officer about, what a rate buy down is, or different plans for buying rates down. There's different ways to do it, and what they need to, or what you need to, through your agent, ask a seller for that credit in order to get that done. Okay, so that is the data for March 2023. Let's talk about this a little bit. So there you have it, the March 2023 market update. So what does this mean? So the market looks like it's getting better as far as property values stabilizing for sellers, and it's really driven by low inventory. Now, if inventory does increase through a recession, and then that leads to foreclosures, then that's a different story. where if there's people losing their jobs like crazy and they have to sell, that is the key. If sellers have to sell right now, the employment market is too good for that to happen. And that's really the driver of what makes a whole lot of homes go on the market, and people needing to sell and needing to sell at a loss, short sales under what they owe on their mortgage, that kind of thing. And that's what we saw in the whole 2007, 2008 thing, was people had to sell. It's not a question of wanting to sell. Clearly, if you look at the market right now, not a whole lot of sellers want to sell. Not a whole lot of sellers want to change from a 3% or under interest rate into upper sixes or sevens. The only people who are really doing that are people who either have to, are making a big life change, maybe moving from a very expensive area like the Bay Area into Sacramento, or from Sacramento into a different state. Maybe they're downsizing from a 3,000 square foot house into something like 1,500 because their kids have all moved out or something like that. But that's why you're seeing very, very low inventory. I mean, in the town that I live in Sacramento County, at this time last year, there were about, I'd say, somewhere around 75, 80 active listings. Active listings are homes that are currently on the market, not pending sale, on the market that you can go and offer on. As of yesterday morning, there were 20. Now, you go back to this time, 2019, there was typically around 120 on the market at one time. So that's a suburb of Sacramento where there's 30 plus thousand, nearly 40,000 people. So that is a very, very low inventory, and it's driving competition to where I talked about in my last month's video. I had one of my busiest open houses I've had in years at a home in, this was in Fair Oaks, and it was crazy. It was a crazy open house. We had lots of offers. We went well over the list price on that one, and it closed with really great terms for my client. My client had almost a month free rent back. I'll use that term loosely. They got to remain in possession of the home at no cost to them for nearly a month after closing. So those are kinds of things that we were not seeing when we saw the market kind of with a little bit of a hiccup with rising interest rates. And now we're seeing that again, and it's driven by demand and low inventory. And we're likely going to see low inventory for a while until we see something happen with the economy that would be serious. And that's just not that common. And I know that people love to say things, or you maybe are hearing some news. If you're not a homeowner and you want to hear some good news that there's going to be a crash and you're going to gobble up some homes, that's just not that common. And what happened in 2007, 2008 was an anomaly. It had never happened before. You could say that maybe the Great Depression in the late 20s and early 30s, something happened like that where home values were really low. But really, that's it. I mean, there have been dips in the market, but they've been pretty minor. And even this dip in the market, you're actually paying for, even though the homes have lost some of their value, you're actually paying more than you would have if you bought at the very peak of the market, because interest rates are so much higher. Now they're closer to 7%, so that's okay, and that's actually somewhat of a normal-ish rate. We just hadn't seen that for a while. So if you're a seller, I would say it's a really, really great time to sell, unless you're looking on the market and not finding something that you want to replace your property with. Now, if you're a buyer, I'm always an advocate for home ownership. If you're someone who thinks that homes go up and down in value, I'm not going to be a financial advisor to you, but I'm just going to tell you, look at the Case-Shiller index or some other housing index, and you'll see that homes, if you draw a straight line from 5 years, 10 years to the next 10 years or whatever, homes are more expensive significantly. It's you play the long game in real estate. It's not really a game to play. You're playing, you're buying a residence, you're buying where you live. So you can either, and this is, I don't really like to use little taglines, little slogans. This is one I've heard a lot, and it is absolutely true. And it's, you're buying a home for someone. You're either buying the home for yourself, or you're buying the home for your landlord. And there's a lot of landlords who want you to think that buying a home is a bad investment. There wouldn't be so many landlords if that were the case. I'm a big proponent of home ownership. And you're watching this video, you probably won't even use me as a realtor, so why would I even say that? It's something that I'm a huge proponent for. So, but make your own decision on that. Let's see, what else can I tell you? Oh, yeah. So, one thing that I have coming on the market. So, one way that we are seeing homes coming on the market is when people have to sell. And one of the niches that I work in that I've developed, and I'm really a professional, I would say I'm an expert at it. I'm a certified probate and trust specialist. And I work in a team where one of my team members is a legal document assistant and handles the probate itself from start to finish. I have another probate channel. I'm actually going to link that below. So if you know somebody who is going through probate, even if they started with like an attorney or something like that, essentially what my team does, if it's an uncontested probate and there's real estate involved that's valued at least 300,000 anywhere in California, um, my team will do the probate at no cost. And that we've saved on average, it's over $10,000 that my team saves. But my team has seen estates save into the six figures on our program. Because ultimately, if you're selling the house anyways, all we do is we charge the maximum commission rate that probate allows, which in most counties is 6%, and then you don't pay for the probate. And if you look at what probate fees are, uh, they're in the tens of thousands, if not more. So we'll actually do that without charging a fee whatsoever and get you through probate really in record time. It's typically the standard average probate, say in Sacramento County, which is a very busy court, is about 12 months. And I talk to people all the time who've been going through probate for 2, 3, 4, 5 years, which is ridiculous. So what I'm going to do is I'm going to link my YouTube channel for my probate information below. We drop videos every week on that, and we started doing that in December because we get so many calls and we answer so many questions, especially just from other realtors about probate sales. So it's one thing that I do a lot of. You don't see them all on my social media. The reason why I ever put listings on social media for the most part is to remind people that I'm a realtor, because that is not the place where people buy real estate. So I always kind of get a kick out of it when people comment like, "Oh, someone should buy this home." They're advocating for the neighborhood, and that's great. I love the interaction. Ultimately, um, there's other proven ways where we actually get that exposure, and I have those listings in everywhere relevant where people are actually looking for homes, and always looking for really the best terms for my client whenever I sell a home. So I treat a probate sale the same way I treat a regular sale. They're far, far, far more complicated than a regular sale from a listing perspective. Anyways, so I'm going to link that below. And a lot of times, if you ever want to reach out to me and see if I have something coming up, the probate ones, because they take so long to get to the market, and that's because of the court action that needs to take place in order to get them there. There's quite a few that I know about. I know about them all over the place. I have one coming up in Sacramento. I have one coming in Placerville, a really kind of neat home on 5 acres, horse property, has an arena, has a seasonal pond. It's a big pond right now. Let's see. I mean, I have one coming up in Arbuckle, which is in an agricultural area north of Sacramento. Some other ones in Sacramento, Modesto, all over the place. And I know about quite a few. It just takes some time to get on the market. A lot of times they're fixers or haven't really been updated that well, and sometimes they're really beautiful. So you can always reach out to me and ask me if I have anything about that. And if you have any questions for me, I love to go and look at people's homes and tell them what I think of value and what they could do to maybe even increase their value for sale. Just give me a call, text, email, messenger pigeon might find me. I don't know. Anyways, I'm Brendan Mohr, the Realtor. Thank you so much for watching my March 2023 market update.